let's just kind of look back in history. If you can go back to 11/15/1929, so it's kind of awesome that you can go all the way back to the crash. If
Let's
you want
hope, yeah.
For a lot of people, they would have looked at this and said, this has got to be the bottom. There's no way this doesn't go up from here. But go ahead and maybe plug in, you know, let's go 6/5/1931. So yes, it did rally quite a bit from, you know, 195.35 low to 297. So, you know, 30% move right there. And then it undercut and kept going lower. You see how it got right up to that 40-week line, hit resistance and got turned away. And then here we are at lows again. And so people are maybe saying, hey, this has got to be the low. And what happened there? Well, let's go all the way out to 5/23/1933. So, you know, so 1/19/89, you know, where we just were at, which looked so bad, looked so devastating, it got much, much worse, right? And then this is where we have that, you know, a lot of weeks down in a row and everything. That was the 1932 area. And you know exactly what Scott said, you know, hey, that was around the bottom, and you had that really powerful rally. Look at that. You went from 40.56 up to 81.39 in a matter of weeks. That was like 100% move right there in just a very short period of time. So you can get those very powerful rallies, but you have to be very nimble, because look what happened. You were right down at 49.68 just a few months later, and you had a retracement. That's kind of what happened in 2003 as well. You had a strong move off the bottom, a retracement, and then things were moving for a while. So again, it just helps to kind of look at history and see how bad things can get, you know, just so you have that in the back of your mind, like, hey, this could get worse. You should always, you know, think that it could get worse. And that's why we're very careful, and why we go in slow at the initial follow through day, and why we're waiting for the confirmation signals, waiting for more signals to tell us, oh, you know, I mean, in this case, you finally got above that 200-day line or the 40-week line, but you couldn't hold above it for very long, and you got that retracement. So again, it's just I think helpful to look at, you know, history and to see. Now, this was, of course, a very unusual event, you know, and not something that we see on a regular basis, but I think it's still instructive.
Mm-hmm. Exactly, because we're not saying that, you know, we're here, or, you know,
Right. Mm-hmm.
But it's good to open your mind to all of the different scenarios that could play out. I feel like that does give us an edge. We don't have a crystal ball, but we can look at historical precedents.
And you can look at the 2003 bear market. You know, as Scott said, there were a ton of follow through days during that period, especially since it was higher volatility, which made it kind of a little bit easier sometimes to hit the mark. I mean, there was a reason why Bill had for years said 1% was the follow through day level. And then in that period in the late 90s, he said, no, you need more than that, because 1% is not even average in this market. You need a lot more than that. He was saying 2 and 2.7% at one. I mean, he just kept on raising it at one point. But there again, in the 2003 or 2000 to 2003 area, you did have those tradable rallies. You had some moves up on the NASDAQ that were 40% or more. So, you know, if you took advantage of home builders had a big move during part of that time. Education stocks like University of Phoenix and Apollo and what was it, Corinthian colleges, you know, I think, and then there was the defense names that were doing very well. So you did have those pockets of strength sometimes in these rallies that were pretty powerful, you know, but you were still in this overall downtrend where you see a lot of times you would hit those moving average lines and get turned away. So, you know, it remains to be seen what happens this time.
Right.
You know, we could be at the end of this, or we could be in for, you know, more sideways action. I mean, just in the recent action, you can kind of look at on the NASDAQ. Here we are, we tested the lows that we hit just a week ago, you know, that former rally attempt. We got up to 12,000, hit our heads. I mean, we could go back and forth here for a while, just between that trading range. We'll have to see.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.